For decades, the US dollar has ruled global finance, a legacy of the post-World War II Bretton Woods system. Even after leaving the gold standard, the dollar became the world's primary reserve currency. Most global trade is priced and settled in dollars, no matter the countries involved. But this dominance gives Washington powerful leverage. Financial sanctions can cut countries off from the global economy. For some nations, this creates a vulnerability and a strong incentive to seek alternatives. In response, Russia has proposed a bold alternative for the BRICS bloc, a gold-backed independent payment system. The idea is to let BRICS nations, Brazil, Russia, India, China, South Africa, and new partners trade directly, bypassing the dollar and Western-controlled systems like SWIFT. Instead of using dollars, they'd adopt a new unit of account, pegged to a fixed weight of gold. Gold's neutrality and stability would anchor trust, unlike fiat currencies vulnerable to political whims. The system, often called BRICS Pay, would be a secure digital ledger hosted within BRICS countries, immune to outside interference. Transactions, say India buying oil from Russia, would be settled in local currencies, calculated via the gold-backed unit. This reduces costs and eliminates the risk of external sanctions. For Russia, especially after being cut off from SWIFT and seeing reserves frozen, this is not just economic strategy, it's geopolitical necessity. BRICS' push for a new system stems from frustration with a global order that doesn't reflect their economic weight. Despite representing over 40% of the world's population and rivaling the G7 in GDP, BRICS nations have little say in institutions like the IMF and World Bank. The weaponization of finance, sanctions, and asset freezes has made the risks of dollar dependence clear. China, for example, sees its US Treasury holdings as a potential liability. Even non-rivals fear being caught in the crossfire of secondary sanctions. Trading in dollars adds complexity and cost, multiple conversions, fees, and currency risks. A direct payment system using local currencies could save billions and boost intra-BRICS trade. Ultimately, this is about building a multipolar world, reducing Western dominance and giving the global South real alternatives. Creating a new financial infrastructure is a step toward reshaping global power. It's a project to redefine the rules of the 21st century economy. BRICS Pay stands on three pillars: a gold anchor, a digital platform, and local currency integration. Gold offers a stable benchmark. One BRICS unit could equal 1 gram of gold. The digital platform, likely blockchain-based, records transactions securely. Local currencies make it practical. Companies pay and receive in their own money, with gold as the reference. This blend of gold stability, digital speed, and local practicality is what makes BRICS Pay disruptive. The BRICS gold-backed system aims to be a financial fortress, immune to Western sanctions. By decoupling from the dollar, it removes Washington's main lever of economic coercion. Transactions outside the dollar and Western banks are beyond the reach of US authorities. Gold reserves, increasingly held domestically, can't frozen like digital assets. Hosting servers within BRICS borders prevents a repeat of the SWIFT cutoff. For sanctioned countries, this system is a lifeline. For China, it's assurance against future US pressure. If successful, it would blunt the West's most potent foreign policy tool, forcing a shift toward diplomacy over economic threats. The dream, a world where economic interdependence can't be weaponized by a single power. The vision is bold, but the obstacles are immense. BRICS is a diverse group with clashing interests. India's ties to the US and rivalry with China create deep mistrust. China's economic dominance raises fears of swapping dollar dependence for yuan dependence. Internal disagreements have already cooled enthusiasm for a common currency, shifting focus to a payment system. Technical challenges are daunting. Harmonizing regulations, building secure tech, and managing gold reserves require unprecedented coordination. Who sets the gold price? Who audits the reserves? Trust is in short supply. The dollar system's convenience and deep markets are hard to replicate. Global commerce is deeply embedded in the dollar. Shifting away is a monumental task. Success depends not just on BRICS' will, but on convincing the world to trust a new, untested system. This is a marathon, not a sprint. The West won't watch passively as its financial dominance is challenged. Expect economic penalties, tariffs, sanctions, and threats against countries using the BRICS system. The US could impose secondary sanctions, forcing global banks and companies to choose between the dollar and BRICS Pay. Most would stick with the dollar, at least initially, isolating the new system. Diplomatic campaigns would paint BRICS Pay as risky, unstable, and a tool for rogue states. Western media and institutions would amplify doubts, highlighting internal BRICS divisions and technical hurdles. Meanwhile, the West could accelerate its own digital currency projects, making the dollar system faster and more attractive. The result, a technological arms race for the future of money. The battle will be fought as much in perception as in policy. The BRICS gold-backed system has sparked fierce debate. Supporters see it as a logical response to dollar weaponization, promising stability and autonomy for the global South. They argue gold is a neutral anchor and a digital system could boost intra-BRICS trade and reduce costs. Critics, especially the West, call it impractical, citing the complexity of managing gold reserves, political rifts within BRICS, and the unmatched depth of US financial markets. They doubt India and China could ever align closely enough for such a project. The dollar's dominance, they argue, is rooted in trust, liquidity, and legal stability. As of mid-2025, the BRICS proposal remains just that, a proposal. The dream of a gold-backed rival to the dollar is still distant, if not unattainable. The world faces two stark futures. If BRICS Pay succeeds, it could trigger the biggest realignment of global power since the Cold War. The world would split into rival blocs. One dollar-based, one BRICS-centered, and gold-referenced. US sanctions would lose bite, trade would shift, and the dollar's exorbitant privilege could erode. Gold would surge in importance, and developing nations would gain leverage, but volatility could rise. If the project fails, dollar dominance is reinforced, and the status quo persists. The grievances fueling BRICS' ambitions, sanctions, lack of representation, desire for autonomy, would only intensify. The world might become more frustrated and unstable, as alternatives are sought elsewhere. Whether the BRICS bridge is built or collapses, the debate has already changed the conversation. The future of money is now a question of power, fairness, and who writes the rules. The next chapter is just beginning.